Hey everybody, welcome back. My name is Lorne Cooper. This is George Tinnis. This is the mortgage update for the month. George, how you doing?
Real good, Lorne. Thanks a lot for the invite back. Always great to be out here and chatting with you and your clients and getting, I guess, a flavor of what the mortgage market's going to look like.
And for a change, things are actually changing. They're not staying the same, right?
They have changed a little bit. I'm not saying that it's time for people to be looking at panicking, but now is a real good time. And speaking with a number of my clients, that you really need to start to look at getting your pre-approval in place. If you're seriously looking at wanting to buy a home, you're really thinking about switching your mortgage, or you're wanting to do some upgrades or any type of renovations, or take any type of equity out of your home for investments.
All right, so I hope you heard that, especially all my buyers out there that are thinking of getting into the market for the first time or upgrading or downgrading, doesn't matter. Take a look, pre-approval right now. Why? What's happening?
Well, I'm going to say, I guess we chatted close to the end of last month. We've seen a rate increase on both conventional and high ratio mortgages. So last month we were talking about 2.29 for a 5-year fixed high ratio insured mortgage, less than 20% down. That rate has went from 2.29 to 2.49. On the conventional mortgage, 5-year fixed, once again where there's more than 20% equity in the property, that rate had moved from 2.39 to 2.59. So we've seen about a 20 basis point increase. Why we're saying about pre-approvals now, why we're saying about looking at doing something with your mortgage, rates are anticipated to go up again this evening. And now that attractive 2.49% mortgage is going to move itself up to about 2.59. And the conventional mortgage, the 5-year fix, is going to move itself from the 2.59. We're told it's going to go up to 2.74. So in the span of, call it, less than 30 days ago when we were speaking, you're looking at about a 0.5% increase in a mortgage rate. Now, 0.5% doesn't seem like a lot of money. But if I can just put it in the most simplistic terms possible, what does that mean in regards to a monthly payment?
Right, because that's what really matters to people.
It really does. So let's look at it and say that 30 days ago till tomorrow, the interest rate's going to go up 0.5% from when we last spoke. So 0.5% on $100,000 is $500. Well, $500 doesn't seem like a lot of money on $100,000. On $100,000, that equates to about $40 a month increase in a mortgage payment. With the average mortgage out in the market today being at $600,000, take that figure now and multiply it by 6, and now all of a sudden your mortgage payment on your attractive home that you wanted to buy is now going to be $240 more a month, which means qualifying. Again,
that's the key for most people out there, especially those that are just getting into the market for the first time.
Exactly. So now all of a sudden you're looking at having to qualify higher interest rate. Your monthly payment's going to go up. So maybe now if you were anticipating only spending $2,500 in a mortgage payment, and that now goes up to $2,750, does that mean that you're okay with paying the extra $250, or are you thinking of buying now back within your budget again, and that means you're going to buy less home? So telling every one of my clients that if you're going to look to be doing something, now is the time to make sure that you've taken advantage of your pre-approval if you have it in place, and get that lower rate. Or if you're planning on buying in the next little while, get your rate locked in. You're going to be very, very happy.
So when you get a pre-approval, what happens? You're locking in your rate for a set amount of time. Generally, that's how long?
That's for 4 months.
Okay, so for 4 months, you can get locked in at today's rates, or whenever you actually get pre-approved, right?
That's exactly correct. Once again, how important is it? Well, $250 worth of importance is what it would cost a number of clients had they not taken advantage of locking in last month and getting a pre-approval.
And it's not just that. It's not just a matter of what you feel is comfortable for you to afford. It's a matter of what the lender feels you can afford according to their calculations. Therefore, you'd be qualified for less of a mortgage, right?
Correct.
Possibly. So, all right, time to lock in those rates. Anything else we need to know about?
That's about as good as it gets for today. I'm sorry to be the bearer of bad news for the first time since we've been talking on these podcasts here, but hey, eventually rates were going to go up.
All right, yeah, absolutely, and it's good to be informed. So if you have any questions about that, reach out to myself, reach out to George. Happy to talk to you guys anytime. Until next time, take care.
Happy shopping.